Portfolio Builder members, let's review today's trade alert. This is first going to cover the SPY trade. We're right around 11 Eastern. Every Monday, Wednesday, Friday, we send you out a quick trade alert. And our goal is simple. We want to collect around $100 credit 3 times a week, 52 times a year, by renting out our SPY shares to gamblers in the stock market. And so if you do that, the math's easy. It's about $15,000 a year of income simply doing this covered call that takes about 2 minutes 3 times a week. And again, the SPY ETF is great because it diversifies your portfolio into 500 companies automatically. The biggest position being Microsoft at 5%. So think about that. Your biggest position in this portfolio, even though it seems like it's one security, it's really 500 securities, and the largest position is only 5%. So the bottom line is the SPY ETF is probably the safest place in the world to store money and generate income. And we're talking about high levels of income. And what's also nice is it really outperforms the real estate rental game because you don't have to repair the SPY or deal with your tenants. You just log into your broker dealer and you can rent out those shares in an instant. So let's look at what we're doing today. Today's a case where it seems like we lost money, but the reality is we made a great deal of cash because the SPY ETF went up in value. So it went up well beyond our covered call, and we had to buy it back for about a 65% loss. And the reason why we did that is because our underlying asset went up in value greater than the loss we're taking on the covered call. So as you will see in a moment, our portfolio continues to grow nice and steady. So today's trade alert is the sell to open March 29th, 2019 280 strike call option for a credit that will be the mid price. So at this moment it's $2.30. So we're taking in $230 credit today. This is below the trading price slightly. So we're not going to get to keep all of that unless the SPY ETF just slowly drifts down for the next 2 days. And that's actually what I'm expecting will happen. So if we look at the trading volume, we can see today the market's heavily weighted towards a flat or slightly down move. We can see there's way more trading volume in the put options than there is in the call options. So that's how we've chosen today's. Now scrolling down, we'll take a quick look at the track record. Like I said, it has gone up about 1 basis point, which is great. And we will continue to do this over and over again. The next trade we have is called the Poor Man Income Strategy. It's based on the 20-year Treasury yield rising over time. And this has had a little bit of drawdown in the last few weeks. You can see it crashed from 35 to 32.70, about a 10% drop. But how did our portfolio perform? It's actually up 4%. So as you can see, because we're doing the covered call, we were able to take a downtrending ETF and squeak out a profit. Now, the only reason we're trading the TBT is because it has great long-term bullish outlook. And if you missed out on writing a covered call and you want to jump into this program, it costs only about $3,300 to own 100 shares of the TBT. And currently, the sell to open 1 April 5th, 2019 33 call would be the recommendation for today. Now, our portfolio already put a similar position on last Friday that expires this Friday. So if you're in that position, don't take this trade, just wait for Friday. Now, I do want to remind you that we have a live webinar where you can ask questions, chat with our community, and get a free 1-week extension to your free trial if you're still on a free trial. You just have to click the register here link in the trade alert email. So I look forward to talking to you guys in a few hours if you have time. And I hope everyone's been enjoying the consistent retirement income we've been generating from renting out the SPY for the past 3 months now. Tomorrow we will be covering a class on emerging markets. How can we take some of our capital out of the American corporations and start investing overseas, primarily in China, South Korea, India, Russia, and Brazil. Currently, we only recommend about a 25% allocation relative to your U.S. stocks in this portfolio until we start to see it outperform. So we'll cover this tomorrow in detail. And if you have any questions about today's trade alert, please join us on the webinar.